Now let's get into the core of the system, which is the entry logic. Now the Nazrah entry logic combines two things. First is the trend confirmation via EMA crossover. The second is your smart liquidity inducement. And I'm going to show you now how it works. On the M15 time frame, we first determine if the market is in a clear trend or not. And we do that by using structure first and then the 144 EMA. Now I'm gonna explain a bit about structure, and that is all you need to know for the time being. Now here, as you can see in this diagram, there is HH and HL, which stands for higher highs and higher lows. Now as long as the market is making higher highs, higher lows, higher highs and higher lows, it is said to be in a uptrend or a bullish market structure. Now, as soon as the market is making lower lows, which is LL in this case, and lower highs, which is LH, that means the market is moving in a bearish structure or it is moving in a downtrend. And that is all you need to know for the time being. Now, if I show you the exact structure in the market itself, it might not be as clear, but still you'll get an idea. And you'll get better at identifying them as you move on and as you keep looking and working with charts. Now, if you see here, the same structure is seen here. And if you look here, the same structure can be seen here as this. Now, this will repeat throughout the chart, and this is the very basic of market structure that you know at the moment. Now, the next thing you need to know is the EMA. Now, if you go to indicators and type moving average, it should show as moving average exponential. Once you add it, it will be something like this. Then all you have to do is go to its settings and change the length to 144. Once you have done that, it should appear like this. Now, as long as the market is below the 144 EMA, we are considering it to be a bearish market structure. As long as the market is above the 144 EMA, that means it's in a bullish market structure. Now, that is your bias. Now, once we have our bias set and we understand if you're bullish or bearish, we're going to drop down to the M5 time frame. And in the M5 time frame, we're going to look for two things. The first is an inducement. Now, an inducement is nothing but a small liquidity sweep that triggers traders in the wrong direction before the actual move begins. To give you an example, if you look here, this right here is a perfect example of an inducement because the market triggered sellers in the wrong direction, took all the liquidity below this low, and moved in the opposite direction. Another example is right here, where the market triggered buyers in the wrong direction, took all the liquidity above this high, and moved in the opposite direction. Now you'll find these inducements throughout the chart. This is the trap we exploit. Now, once you have found the inducement, the second is the EMA crossover. Now, if you go to indicators and type moving average again, you need to select moving average exponential twice. So now we are going to have three moving averages in total. The first is the 144, which is already set. The second would be 18, and the third would be 6. Now to have clarity, let me just change the style to red for 6. Now, once we get a sign of an inducement, we look for a EMA crossover. Now, if you look here, the inducement was done and then the 6 EMA, which is the red, crossed over the 18 EMA. This right here is our entry trigger. And we would have entered, in this case, right here. Another example here is this inducement. Now, after this inducement was done, we look for again an EMA crossover, the 6 crossing over the 18. And we would have entered right here at the candle close of this particular EMA crossover. Now, when all three of these align, your trend direction, which is your M15 bias, your liquidity inducement, which is the trap we exploit, and the EMA crossover, which is the confirmation, you have got a clean textbook Nazrah setup.